Bitcoin monthly close. That's what we're going to look at in this video. We're going to start off on the monthly channel, zoom into the weekly, maybe even the 5-day Gaussian channel, the daily chart, show you what we need to be focusing on in March. So let's get right to it. The monthly chart closed yesterday on February, and if you can barely see that body, don't worry. It's one of the tightest indecisive candles in Bitcoin's history. The open, February 1st, to the close, the end of February, February 28th, was a whopping $18 move, right? So that close, that little candle body is $18. Now, we went all the way up to 25.2 and all the way down to our low of 21,366, but we ended up closing right at basically where we opened. So what does that mean? That means it's a long-legged doji candle. First and foremost, these are Japanese candles. That is by definition long-legged doji. What the hell does that mean? That means indecision in the markets by definition. So it's a coin flip, about as close to a coin flip as you can get. Now, March is already treating us okay, right? We're seeing green, right? This is only 1 day old for this monthly candle. So where do we need to be moving besides up? Well, I would say a minimum, like, can we get above the 50-month EMA, this green line? That was right where we dropped to on our biggest drop back in May, that 50-month. And then you can see it again tagged right here in August, a couple months later. We've been struggling to even close above the EMA 8, but we absolutely did that in January for the first time in a long time. Indecisive, but still closed above the EMA 8, so I guess you could take a positive from that. So we need to see some more follow through. Indecision, yes, but if you have to give a slight edge, which way do you go? You look at the previous candle. So that was a pretty 40% monthly candle is a bullish candle. So we would have to give the slight edge to the bulls there based on that. So step one, let's just close above the 50-month. Let's not get too greedy just yet. Let's look at other charts and maybe get more greedy there. So let's go zoom into the weekly chart and see what we need to be looking at. Well, we have some big issues right here, right? We're under the 200-week, this pink line right here. That's the 200-week EMA, also the 50-week in the green there, right? So we need to close above that to really continue our bullish momentum that we've been in since basically all of 2023. So that number, 25K, right? Let's get a weekly candle sometime in March. I mean, I'd love to do it this week. Above 25K, close and hold it, flip it to support. It's been resistance and since we've been under it, especially the past couple weeks. We've tested kind of back-to-back weeks, right? Let's have 3 weeks and then push through. So this at the end of this week, hopefully next Monday, we're talking and we're above 25K. That would be ideal for the bulls. For the bears, bears would want to see a rejection yet again, and I would say a close under here for the bears to win in a bigger way. That close right here, 21,789. If we close under that, the bears will likely pick up some steam. Okay, so we want to avoid that at all costs. That's our local low. We don't want to be messing around, right? Beyond that, we have a slight edge of a kind of a support zone right here. I would say this low, right? This is the FTX scandal, right? When the FTX scandal came out. I don't know if you can even call it a scandal. What do you call it? Cheating, lying, stealing, asshole? No. Always reminds me of the Clark Griswold rant when his boss, did the Christmas thing. No, you don't get it. So this is our final line in the sand right here. 21K. If we go below that, we're also giving up the 21-week EMA. We're in some spot of bother, as Christopher Robin says. I think that's the guy that said it. If you don't know who that is, I feel bad. But that's our final line. So I'm rambling. When I ramble, I lose sight, and then I just go down the fairy tale land in my brain. But for the weekly chart, that's you get it, right? You get it. Let's look at the 5-day if you're still interested. For all the people that didn't click off yet, we're looking at the 5-day Gaussian channel, which historically can be very significant. And what do we have here of significance? We cannot close above the median line. This is the bullish territory right above our heads, and we just cannot seem to grasp it. We closed the past 3 candles, well, 2 candles. We're working on our 3rd now. That closes today. This 5-day candle closes today and still holding resistance. It's even dropping for us and we still can't do it. So it's pressing down pretty hard on our head here, right? See that median line? It is, as of right now, it's at 20, 23,798. So 23.8. If we can close above 23.8 today, that will be our first 5-day candle closing above the median Gaussian channel. And since we've been red, obviously, look, we tried it right as we turned red and we still got rejected. Since way back in December of 2021 was the last time we were above that channel. So let that sink in, right? No pun intended. But that would be a big thing. Not only if we close above that 23.8, this candle will actually turn green, right? If you go back and look, right? See how these become neon green, right? It's not just because the channel's green. That is because the candles turn more bullish in the upper half of that Gaussian channel. So the 5-day is the secret. I took a question on my last video. I responded this morning. I try to respond to all my questions and comments on my YouTube videos, so leave me a comment. I'd love to read it. But what is the most reliable, and why would you use it on a 5-day? Well, it's like I just said, it's the most reliable. It has the least amount of fake outs in history for Bitcoin. You can use the weekly, that's fine as well. But anything, you can always use it on the hourly chart, the daily chart, the 3-day chart. That's fine. It'll at least tell you a snapshot of if the price action's bullish or bearish, based on definition. If it's under the Gaussian channel or underneath the bottom half of the Gaussian channel on any time frame, you're by definition bearish, more bearish than not. If your price action is above where the Gaussian channel is green on any chart, you're more bullish. It's just historically speaking, the 5-day chart has the least amount of fake outs. Once your price action's on top and you turn green, it's go time. Right? That's go time, right? Let's look at the last time Bitcoin did it. Even in the pandemic, right? Flash to red, price action on top, Gaussian channel's green, you get in, right? It might not be the absolute best buy, but for the long term, for the next 6 months, 12 months, you're probably going to look like a rock star if you buy after your prices are on top and your channel is green. You have to have 2 check marks, okay? So even back here, even if you bought terribly, right? You bought at 11.5, right? And it went all the way back down. But if you had a 3-month mindset or a 6-month mindset, right? Or a year mindset in this case, well, we hopefully no more black swan events come. But you're going to be doing well in the months and years to come, right? So this was a year out, but you would have started to maybe break even a year out, but much longer than that, right? A year and a half, a year and a quarter. Right, you're starting to make significant gains, even if you buy at a terrible time, right? As long as the channel is green, prices are above, minus black swan events, it's always a great time. All right, so that's the 5-day Gaussian channel. Let's zoom into the daily chart and see if we got any other things we can be looking at. Now, see, here's the daily. We flip green, prices are on top. We're more bullish by definition, but if you look at a zoom out factor, you can flash these rare glimpses where it just flip-flops back and forth. You don't really see that at all on the 5-day, and that's why that is the kind of the secret timeline to be using. So in a snapshot, right, more bullish because your prices are on top, your channel's green, you're good to go. But what are we seeing? We're starting to creep down more towards it here, right? Even at this low here, we were still, a 7% above it. I bet we're not quite 7% above it now, are we? So that is a little bit of a concern. Now we're 4% above it, right? So what we do not want to see, even on the time frame, right? You don't want to see this start to curve over here because then it'll turn back red again. And how are we going to do that? Well, if prices come back down here and we start, here's their 200-day EMA in the pink, right? Certainly if we cross that, we're back and below the median Gaussian channel line. So rest of March, right? I mean, here's only mid-March. It's only a couple of weeks away here. We could turn back red, and that would be a big warning even on the daily chart, right? So if we do that, the channel turns back red on the daily, I would watch out and be more cautious, right? We have our levels to be watching. And if you want more decisive, right, here's our lows. We don't want to close under that. Look at the EMA 34 in the orange here, right? Follow that for the daily chart. Let's turn off the Gaussian, right? There, we look at that. Right, let's zoom in here. Let's get a better picture, right? So look at all these closes. We have a little light support here, right? I would say, right, 23K. That EMA 34, 22.9, that's okay. But if we lose that and we close below it, right, how do we know close? You can clean it up, put it on a line chart. There's your closing prices. If we close under the MA34, then we're probably going to our next low, right? That's just your odds. All you have in crypto is the odds, right? And here's your odds. There's our next low. So we're still okay as long as we can maintain this kind of little subtle uptrend here, right? We're in this uptrend, right? With our lows forming. Here's our low, higher low, right? Look at the closing charts. If you want to draw a trend line, the best, most accurate way to do it is put it on a closing price chart, then draw your line, and then you can flip it back to your candles, right? That's how to properly do it as accurately as possible. If you're going to be technically right, that's the best way to do it, technically, right? There's your best way to draw trend lines. Anything else is, just fitting your narrative to whatever, right? So if you see people drawing trend lines, do it yourself and then check them, right? I don't care how many followers they got. If you're not doing it something like that, then I'd say they got some splaining to do, right? So that is the trend line we need to subtly maintain. Now, a trend, this is just to identify a trend, right? If we break this a little bit, it's okay, right? We're just trying to maintain a higher low. So technically, we could come down a little bit, right? As long as we're putting in a higher low than this, if we come down, we're still okay. So that low, that closed at 21.6. If we come down, we can come all the way down to 21.7 and bounce, and we're still in an uptrend by definition. So there's your final line on the daily chart, 21.7. Burn that into your brain. As long as we're above 21.7, we're still in an uptrend by definition. If we lose that, we have a potential to be rolling over into a downtrend. Does it, just because we break this and we go to like 21.5, does that mean we've confirmed a break in the trend? No, you have to have a secondary signal, and that would be another lower high. So you could technically come down, break this low, you could still recover if you make a higher high, right? You'd have to take out that high. Now, if you come down, take out the low, and then come up, and then put in a lower high than this guy right here, right? Then you've confirmed that break, right? Then you're now rolling into a new downtrend by definition. You have to have the two parts: break a new low, making a lower low, and then a lower high, right? And that's how we kind of identified the DXY top way back right when it was fresh. So looking at that now, hopefully just trying to help the most people I can learn a little bit more on TA and how to identify trends before the next guy. That's all you have to do, right? You're just trading. Every time you trade, there's someone on the other end of that trade that is betting against you, quite literally, right? So all you have to do is be a little bit ahead of that person, a little bit better, and you can succeed, right? 90% of all people or more lose money over time, right? If you're not in that, if you've been trading for years and you're up even $1, you're ahead of 90% of people right off the bat. So hopefully that helps somebody out there. I did not set up quote of the day, but we will do it right in front of you. We will refresh for March 1st. When one paints an ideal, one does not need to limit one's imagination. Sure, you can tell I definitely planned that out big time. So I don't have even a car of the day. I freaking forgot. And maybe if you didn't see it, here's your car of the day zoomed in. It's a different picture. I did the BMW M8 yesterday. I will make up for it. Maybe we'll do 2 cars of the day tomorrow. But the BMW M8, you can't get enough of it. I had a convertible picture up. I X'd it out. Shame on me. All right, hopefully you learned something in the video. If you did, let me know that you learned something. If you didn't, let me know what you want to see more of next or explain more. I'll see you on the next video. Thanks so much for watching.